All right, we are live. Let me just point the mic towards me. Roy, how's it going?
Good. How about you?
Good. We were just talking about some geopolitics, I guess you could put it that way,
Yes.
backstage, but none of that in the actual pod itself.
Yeah,
Um,
not as much. No, we're here to talk about stocks and market and all that good stuff. And it's actually a little bit quieter. Like it feels like we've had, I don't know, maybe like a
so
dozen weeks in a row where it's just like so much and we can't get through it all. It's overwhelming. This is one of those weeks where it's like, well, there's a lot happening, but it's not overwhelming. At least that's what it feels like to me.
let me just show you this fun Google Trends, and then we can actually move on to stock related news. So this is the Google Trends for the term pager, and this is the search traffic since 2004. Do you notice a spike, Roy?
Yeah, a bit of a spike. I had like heard a rumor, like Tevis and I were talking about it. And I don't think we'll get into it like too much, but yeah, I'd heard like one little snippet on X. Like it's been a crazy busy day, and so I was like, "What pagers? Like who uses pagers anymore?" It's like you can Google it.
Which is funny because it's like probably all the Gen Zs that have no idea what one is, just Googling it. They're like, what is that? What are they talking about?
Yep. Yeah, I've actually never have used a pager before, so
Yeah, me either.
it's one of those things where it's like I was kind of too young, but I'm old enough to know at least what it is. So yeah.
So on to stock related news. We get rate cuts tomorrow.
We do.
Interested to hear your thoughts on that. Well, I mean, we've talked about our thoughts on that, but more acutely, the fact that it flip flops on pretty much a like daily basis based on what the market is expecting for rate cuts. So we'll talk about that, and then you, of course, want to talk about some Palantir, and then what else do we want to talk about?
Yeah.
Also, if people have suggestions, like I am
Intel.
happy to read those.
Yeah, we
And
need to talk Intel, and Amazon has a piece. That joint partnership is pretty interesting. The Microsoft stuff is maybe a little bit less significant, but there's some interesting stuff there too, as far as not so much the buybacks, but the AI partnership that they're talking about with BlackRock. I don't know if you saw that. I don't know if I sent that to you. That just popped up.
the Microsoft BlackRock
Mhm.
thing, yeah, I saw that.
Yeah.
That's interesting.
It,
Yeah,
it like it, man. There's if some. I think that we're going to get to a point where there's going to be AI fatigue. As far as like people have just heard it so much and they're ready for explosive results, and you see that with some companies, but for the most part, like things don't just. It's not like flipping on a light switch. And so it takes a while to, especially when you have to spend a lot on capex. And Microsoft and BlackRock announced, I think it was a $30 billion capex expenditure in building out AI infrastructure. It takes a while to realize $30 billion in return. So it's not exactly like just you get instant money for free. So, but between Larry Ellison's comments last week on what AI is doing, between like AIP for Palantir, maybe we'll get into that AIP con, like
Mhm.
it's real, it's coming, it's being developed. There are real results right now, but yeah, there's plenty left to come. But in almost every cycle like this, when you have a major wave, you'll have a certain point where there's fatigue that sets in, and people get less excited about the trade. That can usually lead to multiples being a little bit compressed, and that's okay. That happens, and it could be an opportunity if there's companies you're looking at, like Nvidia is one of those, and I'm not in it all. I'm like, maybe I should really think about it. If this fatigue wave really does hit in the next, 6 to 9 months, like Nvidia falls in valuation just because there's fatigue in the market on that play, it's like, okay, maybe I should think about getting into that. Or if there's some other stocks that are AI related and you believe in what's happening here, maybe Intel. I don't believe in Intel. It's a welfare company, but
I
maybe like
mean,
you're looking at it and you're like, hey, Intel, if it falls to like $16, which it could if in a fatigue wave, especially given their underperformance, like snap that up if you believe in it. So, but it's real. It's pretty exciting to see not just the capex expenditure and the willingness to jump into that, but the real results that are happening. So
take it easy with this AI bearishness, man. We got Palantir investors in the audience watching. Like, geez.
Yeah, we'll talk about that. But let me share this. Let's not skip over rate cuts, because that is probably the biggest piece in where we go from here. So we hit a new all-time high in the S&P 500, despite Tevis, continuing to buy at different levels. Like,
I haven't bought all week. That's why.
Okay, there we go. So just lay off, let things ride. Like, the Nasdaq is not recovered fully to like where you were buying it initially, but I mean, it'll get there if you let it. But throw this up, Tevis. So this is the CME Group FedWatch. You can see this little countdown. So if you're wondering, like, when do we actually find out? Well, it's right there. 16 hours, 52 minutes,
Jesus Christ.
and even seconds. Like this, this is dumb, by the way. And I can't wait until like the Fed and the Fed meetings eventually, and this may take years, goes back to like nobody really cares, because it doesn't.
Seriously, having like a countdown shot clock to Fed rate cuts is like, it's the equivalent of Jensen signing tits to me. Like that is to that level of peak craziness.
Yeah,
why does this exist?
So to be fair, like this, I think, is not new. This has been around for a little while when meetings come up. As far as rate probabilities, like you said, these change on a daily basis. Right now, the market is looking at and pricing in 66% chance this would be a 50 basis point cut, and a 34% chance of a 25. Tevis, what do you think is going to happen tomorrow?
So it's interesting, right? Because some Congress people, and I think I sent you this, Roy, some Congress people were writing letters to the Fed asking for 75 basis points.
Elizabeth Warren, yep.
Was it Elizabeth Warren? Of course.
It was Elizabeth Warren.
I should have known. That has her name written all over it. 75 basis points even, right? And we were, like, last week it was 50-50, whether we were going to have 25 or 50 bips. The week before that, I think 25 was the favorite. So it's interesting, man. Like I said, I don't know how the market reaction is going to be. Like, I'm slightly more bearish on it. I think that 25 could signal, that it's too slow. The Fed is not fast enough to move. I think 50 could signal that it's too heavy. But I guess now that the market is like pricing in 75 even, or at least that we're getting people chattering about 75, maybe 50 might be the perfect, thing to do.
Yeah, I think 50 is what they should do, and so they're probably going to do 25 because they rather. I mean, like, that's fair enough. But I mean, like, there's been others that have called for rate cuts for a long time. We even had Jeremy Siegel on CNBC during the yen carry debacle back in August, and he was crying for 75 basis point emergency cuts. So that would have been, a month ago when those would have hit. We didn't know how bad that trade was, to be fair, but no, I think that they're behind. They should already cut 25 basis points, so they should do 50 here. They won't, because it's the Fed. They'll probably do 25. We'll probably go down for the market, but because I think that instead it'll probably be 25 basis points, and the market will dump, and then it'll rally, just because we're in a bull market. That's what happens. And I think the main thing is here, honestly, it's more about optics, like that there is finally a rate cut after like years of expectation. And I think the market, even though it's probably priced in and several cuts have been priced in, it'll still get excited about that. And it's not just the markets, like it's not just baseless speculation, guys. So I had coffee with a newer friend of mine that he works for a major lumber company here in Houston, and like Houston's a big city, and they do a lot of business. And he's talking about how crazy busy that it is, that things are just beginning to wrap up, and then the demand that they're beginning to see and that they're forecasting based on like rate cuts is one of those pieces. It's not the only piece, but as cuts are happening, businesses, especially those that are looking out at the next fiscal year, they're making decisions now based on the size of this cut and some other factors too, as far as how aggressive they go into whatever type of business that they're in. And that will also translate into the builder market. So,
yeah. All right. Just because he's like spamming the chat, just to bring this freaking psycho up, no rate cut.
He's wrong. No, there's Jerome
He's
Powell.
wrong. Yeah, you're wrong.
Yes, like period. Done. But so Jerome Powell does not like to spook the markets. It's not by chance that so many Fed governors have mentioned the need for and openness to multiple rate cuts this year. It's not that Jerome Powell controls and pulls all the strings there, but they would not be coming out the way that they have been doing and talking about that had it not been a strong possibility. Like you might see one or two, but not to the extent of what we see. So I think that it's 100% guarantee that we see at least a 25 basis point. And that's to me, I think that personally, I think that's like a 75% chance of that. And then a 25% of 50 and basically none of 75. 75, I mean, Elizabeth Warren might be happy, but I think the market would be like, wait a minute, why are they doing 75? Is something wrong? And then if you look for something being wrong, like you can cherry pick data right now and see that there are some concerning data points. But overall, the story is mixed. Probably soft landing, maybe minor recession. But yeah, they need to cut. They'll do it. And null is wrong.
I mean, I guess I like this comment. You know, the Fed goes with the consensus view. It's just a matter of, you know, whether they're fast enough to actually make it 50 and whether that sends the right signal to the market, right? Like, I think so. Like I said this before, right? The pro and the con is that we have no meeting in October. And so I think 50 will not seem heavy-handed because you're allowing yourself the flexibility for more unknowns to come. Like if they do 25 and some numbers come out, you know, that are really brutal, let's say, they're going to look too slow to have acted, you know?
Yeah.
If they do 50, then that might be, you know, heavy, but really is it? It's like a month earlier than the next, you know, than the like November cut, right? So it's like they're just doing it they're front loading it by 1 month. So I don't think it's going to be like the end of the world, right? Like I think 50 sort of makes sense to me because there's no meeting in October.
Yeah, I mean, there's a lot of reasons why. Anthony Noto mentioned it too, that businesses oftentimes are looking at their next fiscal year in October. And if they have the confidence of that 50 that's already in the books, that'll give them greater confidence and aggression as far as expanding. So it'll be good for growth, better for growth now to do 50 and then maybe 25 later versus 25 now and 50 later.
Yeah, it takes Jesse's comment, right? They can always do 50 in November if they really wanted to.
Yeah, yeah. I don't think it's a huge deal either way. They should do 50, absolutely. But I mean, yeah, I have no confidence in the Fed not being slow. So as far as a consensus, they have not gone against near-term consensus. They have gone against and even discussed against early consensus. If you remember back in March, a lot of people, well, really back in January, people were expecting rate cuts in March. And it's a lot later than March. And that was consensus view. So not Anthony Noto's view and apparently not Jerome Powell's view. So we'll see. Now, the one thing is Noto has been very conservative and actually right on the money as far as rate cuts. And since he said, hey, they should probably do 50, like the question is, and I Tanner and I actually talked about this the other day.
Who?
That other Canadian fellow, like Tanner.
I don't recognize that name on this pod.
Oh, okay. Well, anyway, another nameless, faceless Canadian said, you know, does Noto have like insider knowledge? Probably not, but I mean, maybe. Like, he's a powerful guy. He's got connections. He might be hearing like, yeah, they're serious about talking about 50. So we'll see. Definitely rate cuts.
Yeah, I don't know. Like, if I were in Noto's shoes and I had insider knowledge, I'm not going to be looking to flex on CNBC to show everybody that I'm so smart and I'm right. Like, I think it was literally like presenting a case for 50 to say, hey, this is why it benefits our business, but the entire economy as a whole, if it is 50, you know, now and then 25 later on. So I don't know. Anything's possible. You know, I think that I want to bring up this comment. Hold on. These guys are just I can't find it. Oh, yeah. What's everyone's plan? So what are we doing? You know, how are we going to react to this? Whether it's 25, whether it's 50. like in both cases, I don't know, man. Like I flip flop, right? Because I think the market won't be happy either way. There could also be a world where the market is happy in either case, regardless of what it is, simply because it ushers in the start of a change in policy for the Fed to start a stair step downwards towards lowering. And I mean, just double tapping on the whole Buffett concept of interest rates being like gravity, right? Like it pushes a lot of these money market funds back into the equities, a lot of the money on the sidelines back into equities, and everything is going to rise as a result of it because the rate of return is going to be much better because compared to the treasuries rate, it's going to be much better, right? Like what you can get risk free is not going to be as high. And so people are going to be looking for a higher return. They're going to go back into equities. And if you're fully invested right now, then, obviously that's going to bode well. I think historically, the Fed has always been late to cut. And by the time we got around to rate cuts, we were like knee deep in a recession already. And the economy was like sort of in the gutter in many cases. And so I think compared to previous instances where we've had situations like this, I mean, we're doing much better, right? Like, I think the businesses who like they just reported, the numbers seem fairly consistent, fairly strong. Their outlook on the economy seems fairly strong. And so I do think that with the amount of money that we have in the sidelines, there is a real possibility for everything to sort of catch a bit upwards from now going into the end of the year. Of course, the unknown is the election, what's going to happen there. But every passing week, that sort of is muted more and more because a lot of the market is already pricing in stuff based on like what they're seeing with regards to what the election results are going to be, what they're expecting, what they're forecasting, so on and so forth. I want to get your sort of thoughts on what's everyone's plan, and then I want to throw up this chart. So let's start with that.
Yeah, as far as me, like I'm not doing anything different. I still have a large chunk of cash to deploy. Been deploying it. I bought like 100 more shares of PayPal yesterday and some leaps, not in PayPal, but in Sofi, actually. Even though I said I was done buying, I'm like, no, I'm not. But yeah, realistically, if I didn't have any cash at all, today I would have probably sold some Robinhood leaps, maybe some Sofi that I'd recently bought and run up, maybe a little bit of PayPal leaps, not stock. Those are just options, just to have some cash on the side, because I have no confidence in the Fed being on time, and the markets. It seems more certain about 50 basis point than I think is warranted. We might get it. I might be wrong, but I'm not a trader. I'm an investor long term, so I've got some cash, and I'll buy that dip. Like it is if we get 25 basis point and the market sells off, and over the next week, like we see 5% down in the S&P 500 and NASDAQ, like that's for me, my perspective is that's a great dip to being average in. And I'll probably deploy a significant chunk in the next 2 weeks in that case. And we need to talk about seasonality over these next 2 weeks. Most of that cash will be in the market then.
So I lied. I didn't not buy any stock. Well, actually, technically, that's true. I did buy 2027 January leaps for Sofi because I think yesterday was the first day that they came out.
Yeah.
So your boy was first in line for those. I bought the $15 strike price, January 2027 leaps. I think I'm going to be adding to that position. Why? I don't know what's this directed to. But
it's because you're trying to tank Sofi. That's why.
Well, so here's the thing, and I don't know if this applies or not, but technically I did sell for the first time for Sofi because I rolled some leaps to a later expiry date. So I sold those and I used those proceeds to buy 2027. So technically, Sofi should be climbing much higher because technically I did sell some of my leaps. Just saying. I don't know if that's, it works like that. But if we see Sofi climbing higher, I'll take the credit for that, for sure. Now, moving away from that, I want to just throw this up and get your thoughts. Historically, the second part of September is one of the lowest performing periods of the year. As you can see here, September 16th until the end of the month is, I mean, on average, you're having like down days almost every day. This time might be different, famous last words, but this time might be different because of the rate cuts, again, driving the market up. As you can see, historically, end of November or end of October, all of November, and end of December are pretty good months. March, April are pretty good as well. And then you have this sort of rougher period here, the second half of September. So, of course, neither of us can predict. I do have money on the sidelines, just waiting for a dip like this. But at the same time, like I am also putting money into, leaps on Sofi. I bought Hims the other week. I bought Celsius. And so I am making purchases, but I'm not like going balls to the wall, just because I do think that as we head closer into this election, if the reaction to rate cuts is negative, if there's some geopolitics or whatnot, or even if it's just like some seasonality based on historical averages, we could see a pullback. I know we might differ in that opinion.
Yeah, I mean, like, so that in a bull market, when the market dips, that's a good opportunity. That's the way I see it. So if it does dip in September, I would actually welcome that. Like a crash, no; correction, no; but like a dip, 5, 6, 7%, sure, that would be amazing. Actually, it's a terrible feeling when you're fully invested and you see your own personal all-time high, go down, 10, 15%. But if you have long-term horizons, you're not a trader. At least to me, it makes sense to buy the dip in names that I want to add to. So I'll be doing that aggressively. And it may be the opposite. Like, this is an election year. There's a rate cuts happening, and I think that as market participants are better informed and have better access to technology and things like that, like those tend to be, I don't know, it can change things significantly. So yeah, we'll see. Seasonality doesn't really bother me. Like I usually the only thing you saw you talked about it, October, like it's called Uptober for a reason. Like that month tends to be very, very good. And so like between a nice juicy dip in September and then going up in October, like it's amazing. Like it's a good time to buy. I usually buy fairly heavily whenever I have cash. Last year, I don't think I had much. I think I was 100% invested at this point. But the only place where I'm a little bit cautious in September is with crypto. Just like seasonality in the stock market, it's like, yeah, it's a bit down, but like you look at crypto and Bitcoin especially just gets slammed in September typically. So we'll see.
Yeah, I'm just laughing at the comments. I want to just bring up this comment here. TJ, I sold 20,000 shares of Sofi at $7.80 to buy Leaps a while back. TJ, what expiry date was that? Was that 2026 Leaps? And are you buying the 2027 Leaps? And if you want to come on the show, let me know and I'll throw a link your way. Because that's something that I've been thinking about doing as well. Like, let me sell a portion of my shares and let me buy some 2027 Leaps or June 2026 Leaps and make a more aggressive bet in that fashion. But, I'm not sure.
Yeah, I'm not doing that. I do have not every single one of my positions do I have options in, but Sofi is one where I have a good number. Yeah, I want the shares that I have. Those are long term, and I know if the Sofi just roars and you're in Leaps instead of in the stock, you're going to do a lot better. But I mean, we're not guaranteed that. There's uncertainty in the market, and as far as like what's going to happen in the next year or two with Sofi, I have a pretty good guess, but I was not thinking we'd be trading at underneath $8 substantially for most of the year for Sofi. Did not foresee that. Did not foresee rate cuts being held off this long. So there are always surprises. And the thing is, options are inherently risky. So it is a bit of a gamble, depending on the strike and the time that you give. Maybe not as much, but I see it the other way too, like selling covered calls aggressively when you're in price discovery territory, like on Palantir. You got to be careful, unless you're good with selling at that point. Then that's fine. So yeah, just be careful with options. If you guys are not familiar with them, maybe paper trade them, study up on how they work. TJ is a good guy to follow if you
Let
aren't
me
into the will strategy. Like, he makes a living off of that, but it's not for everybody. It's not for every portfolio. And there's risk even in when you do something as conservative as a will strategy, there's still risk. So appreciate that. Know what you're getting into.
Let me text TJ, see if he's wanting to come on the pod. Yeah, I think the thing with me in options, so I don't sell covered calls, although I should, because my broker doesn't support it, so I'd have to switch brokerages, and that's like too much of a headache for me.
Just wait till Robinhood gets up into Canada. So,
dude, I'd be first in line. Like, I think it would be amazing. I think it would be very successful here. And I think it would force everybody else here to innovate, because we're still stuck in a very legacy type of fashion, because everything is so monopolized to the point where like there's no innovation. It's all like stifled. So that's the first thing I think. But even with actual call options, like I don't do it very often, simply because I don't like to monitor it that closely. Like I don't look at my at my brokerage account any given week. I don't look at my Webull, every day or every week. Like I just get so deep into my work and other stuff that, like I said before, I've said multiple times, if it wasn't for the content, I genuinely would not be as into the market as I am. And so when I have leveraged bets through options, like I just forget about them, and I open my brokerage and I haven't seen anything in my brokerage in 3 months. I'm like, oh, I remember I bought these calls because I was on some random podcast, and I was like, oh, let's put $500 into this. It's now zero, and the optimal time to sell that was 2 months ago, something like that. Right. So I don't know. I'm not good at that part.
Yeah, Christian actually brought up something that's good too. Like if you do want to do a leap option, you can do a deep in the money option. This is something that when I was first studying it back in I think 2021, I didn't understand, like, why would somebody buy like a $3 strike or whatever it is on some company that's trading at $40. And the reason why you do that is it's basically leverage. You're not taking out margin. But at that point, you have a delta that's very close to 1, which means for every dollar increase in the stock price, you'll see like 95 cents or something like that, 98 cents, depending on the delta of improvement and increase. So it basically mimics 100 shares, usually for a fraction of the price, like 80, 75%, 60% of the price. So that's not a bad way to do that. There's still a risk even with those because, like we saw in 2022, in a bear market, price and valuation can absolutely crash, even in quality companies that are just printing money. And those that are less quality, and Palantir was one of those at the time, like it crashed from 20s down to like $6 and under $6 at some point. So still some risk, but there's a lot less risk if you give yourself time and if you don't put your strike like ridiculously far out there.
Yeah, like I don't understand. I'm sort of in that camp where I'm like, so the smallest strike price on Sofi options is $5, and I'm like, just freaking buy the stock at $7. Like, why would I?
Yeah, it doesn't make as much impact when you're trading at this kind of valuation versus, like, I don't know what where Palantir is as far as those deep in the money, but I imagine that they're like, if you buy a $10 strike, it's going to be a lot cheaper than buying 100 shares, and you'd have about the same impact. But again, there's more risk. Like the shares, they never go away. The options do eventually expire. That's one of the nice things though about the 2027s that you did. 15 is a bit out there. Like Sofi has to more than double plus the premium. So, but you're giving yourself through 2020 or until January 2027. So more than 2 years of execution. and they're in a position right now where I'd say that they're pretty deeply undervalued. So that I did something similar with Palantir a couple of years ago. I was buying $10 strikes on Palantir. Most of those for 2025, but I still have two because I just barely started buying those when Palantir started running, and I didn't buy more. I figured it'd settle back down. All the rest of it is just fully shares. But yeah, Palantir's up a little more than the $10 strike range. So those are, I don't know, like 25 X's. So it's a small amount, but it's like $5,000 or something. So it's nice. Like it's for like putting in 250 bucks in. No, it would have been a little more than that, but there's risk. Like that could have gone easily to zero. I lost some money earlier on some options in Palantir. So yeah, just know what your risk is, what you're comfortable with, and give yourself time.
Yeah, exactly. I don't know. Like the thing with options, I've learned it's like similar to. This is gonna sound so bad. It's similar to sports betting, where if I'm up on a parlay and it gives me a cash out option, I would be the person to like never take it and just go for the YOLO play. But now I almost always like take it. Yeah. Because if I'm up several multiples, like I'm not going to be like, I want more, because those things can very quickly go to zero, and I've had options go to zero for me before. So, I think 2027, and like I also think for Sofi, man, like we're like I genuinely think that we have a good chance of closing in the double digits till the end of the year. Just given where the rate cuts are, given where the macro is, like I think that we're going to have a rally going into January. We'll see if that happens. I think Q3 is going to be very strong for the business. And I think the money flowing back into the market is going to go searching for stocks that benefit from rate cuts. And guess what? Sofi is going to be one of the names on that list. So I do think that double digits for Sofi is a very real possibility. And I think some of the short-term contracts are not priced accordingly. They're like,
oh yeah,
super pennies on the dollar.
Yeah. No, I've been scooping those up. No 2027s yet. Volatility, by the way, when those first come out, although depending on when you bought, you might have been fine. Plus, the stock has increased a bit. Tends to be quite high. So I wait a couple of weeks, especially if we get the seasonal dip that I expect. Like, man, the contract for me, I'll add some more Sofi. By add, what I'll do is I'll be rolling. I still have some 2025s, some 5.5 strike that I bought when the stock was down in 4s. That I'll roll out instead of exercising or selling. I guess it technically is selling, but I'll roll those out to 2027s at a higher strike. So I might add a little bit to it, but largely I have the Sofi position I want, especially because I think you're right. Like I think there's a very good chance that we're in the double digits by the end of the year. A lot of headwinds that are shifting to tailwinds. So barring a major recession, like I think Sofi is very, very solid. It's a very safe bet for myself personally, especially with shares. Like shares are just real easy. If it takes a little bit longer, it already has. That's okay.
Yeah. Tevis and Roy, where do you realistically see Sofi in January 2027? Your base case, please. I'd say minimum 15, max 25, 28. Man, you got to be crazy if you think Noto isn't going to hit his tranches in 2026. So that's one thing, is he's got 300 million reasons to hit those tranches. The second thing is that we know their forecasts are 55 to 80 cents EPS, and this is 2024 forecasts. Every single quarter, they're going to be revising that number up. And that's without accounting for new product launches, without accounting for new initiatives, without accounting for new acquisitions, which they average like one acquisition a year over the past 4 or 5 years. So, I think that it might be much, much higher than, 15 minimum, and definitely much higher than 20. Because keep in mind, like $28 is what you're saying as your max. The stock has hit $28 before, right? I think it capped out at 26, something like that. But it's been in that range before, right? And in 2027, I think they're going to close off the year 2026 with much higher than 80 cents EPS. I think it's going to be closer to like a buck EPS, just given all the other stuff that compounds on top. If financial services keeps up the growth rate, man, that's going to look like a crazy, crazy business. Not to mention that we're going into a favorable rate environment in 2025 for SoFi and beyond. And so I think you have this like perfect storm, this golden confluence that Roy always uses. I don't know, like $15 looked fairly cheap to me.
And building on that, like I agree. So Noda has basically given us what I think is the base case in those 2026 EPS projections. So take that, look at price to earnings, and you can get a pretty good idea of base case. Again, they tend to increase guidance, and that's assuming no new initiatives at all. Now, financial services, just taking that, credit cards and the Invest platform have been drags. I've actually signed up for the Invest platform, playing with it a little bit. From what I've seen, this is my first time on it. They've made some improvements there. So it's not going to compete with Robinhood head to head at all, but that the flywheel will be in, I think, higher effect. I think at some point in these next couple of years, this will no longer be a drag, and it may just be in the next year. And credit cards in particular, we'll have to see how they do and where they're at, but I think that they'll have a pretty good product out there. They're, of course, opening the loan book. Sky is the limit with student loans in particular and mortgages refinancing. There's a lot of opportunity. I mean, a lot. And they're not capital constrained like they were at this time last year. Like they were nearing that point where it was like, okay, is it really prudent to continue issuing loans the way they are? At the same time, like member growth continues to do very, very well. I think they're going to have the two more excellent quarters of member growth. So it's like, yeah, 15. Like if it's 15 in 2027, I'll be pretty surprised. Like very, very surprised. But like even then, like if it is, let's just say it is. With the shares that I have, of course, with the Leap options that I have some of those too. They may not be so good, but that's more than a double, or that's basically a double right here. That's not terrible. That's not great. That's not what I think was going to happen. But if that's like the base case, that's pretty great. So.
Okay. What does $1 EPS at 5 times sales equate for share price? I got to do some math here. Roy, do you know this top of your head?
5 times sales. I'm not sure what he's meaning. Price to sell or
per share for revenue basically. 5x price to sales ratio.
I'm not sure if he's asking us to. Oh, is he asking us what the PS would be, the ratio? Yeah,
he's asking what the share price would be. Dollar EPS would be, I don't know.
It depends on the multiple. Like if we're looking at like 15 or 20x, like I could easily see a 20x multiple there for EPS on SoFi and just plug in those numbers. Now the float count will be a little bit higher. So like that's one of the things about historic numbers, especially if you take a stock that has changed a lot as far as its float. Keep that in mind when you're looking at historic numbers. Plus, what happened during COVID is not the environment we're going into right now. It's not exactly free and open money, but 5 PS, yeah, and it's a lot lower right now.
Well, hold on. So they have like 1 billion shares outstanding. So if they're doing $1 EPS, like would that be 1 billion in the bottom line? No.
Earnings per share? No. Well, yeah, $1 earnings per share. If they have 1 billion, that's $1 billion. Yeah.
Right. Which is insane to think about. And then if they're doing that, then what is their margin? Like if that's the bottom line, then what's the top line? Because right now they're doing about 600 million and they reported 2 cents EPS, and that 2 cents was like 20 something million. It'd be crazy. Like the stock price at a 5 price to sales for $1 EPS would be pretty insane. Like it would get pretty nutty.
Yeah. I mean, it just depends on margin and where that's coming from too. And then like the other factor too is I would hope by 2027 that we see the tech platform really come in on its own. I think that that may be part of that golden confluence of this next year and a half within the tech platform, based on comments from Noto and team. Like they sounded like it was very far away back in Q1, but it sounds closer. We'll see. There's no guarantees there, but that can also give multiple expansion, and that tech platform tends to be a higher margin product too. So
yeah, so I'm just looking right now. Yeah, dude, the numbers would be insane if they're doing. That's I need to double check that math because like the numbers look crazy. But anyways, yeah, I think like a $30 or $40 share price, for Sofi by 2027. Again, if they execute to that degree, and if they can actually roll out those same products, it's just insane to model out an 80% plus growth rate for financial services years into the future. Like it's insane. So we'll see what happens. I know we planned on talking about like Intel and other stocks in this episode, but it can get really crazy really quickly. And I think 2027 will be really good for Sofi. 2026 is
2025, I think, will be phenomenal. But we'll have to see. Like by 2027, yeah. As far as do you want to talk about Intel and Amazon or your favorite company?
Let's talk about Intel.
All right. You sure? No. So Amazon announced a partnership. Let me see if I can pull that headline up. My mouse actually stopped working. By the way, it's trying to get that ready. And I'm like, what in the world? But I got an extra mouse here. So got that plugged in. I had it. Sorry, guys. This was yesterday's news, but it's still, there we go. Nope, that's the Amazon come back to work thing. Yeah, Amazon, a couple of pieces of news for Amazon. They basically made their employees come back in for 5 days. And it's kind of interesting to see a lot of companies shift back into a work from office instead of work from home office type setting. A lot of people, of course, back in COVID were predicting that this would become the norm, that it said it'd flip. But that's not the case. Okay, so nope, that's...
I do think that like, so there was something else about Amazon that was positive for the stock. But the first thing that came into my mind when I saw that news of Amazon forcing their employees to go back 5 days a week was that is going to lead to layoffs and it's going to lead to people quitting. Because now people have gotten used to staying at home, and a lot of people, the best employees have the most optionality, and those people are just, they have options for where they want to go. They don't need to stay at Amazon. But I thought that would bring the stock price up, because if Amazon does layoffs of any sort, or if they do reductions of any sort, it's going to have benefits in the expense line items. So I was like, weirdly, that might bring the stock up. I don't know.
Could. Yeah, throw this up. I found at least an article on Yahoo Finance, or from Bloomberg originally. So Intel gains after landing Amazon deal. So Intel is one of those names that we mentioned. I had a poll, and then in our after hours talk after Sofi Weekly, we talked about, this would be 2 weeks ago, 8 names. Some of those are underperforming in the S&P 500, like Intel and Boeing, that people have largely written off. Nike was one of those as well, versus some other names like Ulta. Like, what would we prefer to own? And Intel was one of those where it's like they're getting government money and government handouts, and another one was announced this week. But essentially, they seem to me like a welfare recipient, and typically that's bad for individuals and also bad for companies. And Intel has underperformed substantially. Let me share this one actually before we jump in to the news. So this was on Koifin. They post some interesting charts. This is if you had invested in this so long ago. So if If you did a 10,000 investment on Nvidia and Intel 10 years ago, you would have 2.57 million in Nvidia and 7,752 in Intel. They don't do exactly the same thing, but they're in the same industry. That right there is primarily because of leadership. Intel has had terrible, terrible leadership for 20 something years, maybe longer. Versus Nvidia, I mean, Jensen Huang is amazing. So be careful, even if something like Intel is like, wow, it looks pretty safe. There's governments just giving them free money for these fabs, essentially. I mean, they're laying off people like that. That's maybe good. Like it's hard to tell. I don't know if the new CEO has it. So the news was, and let me switch back over. I apologize. Would have had these set up, except my stupid mouse. It's a Dell mouse, a short Dell. Not really. So Intel ends up actually partnering with Amazon. Amazon is getting some chips developed by and built by Intel. It was is in conjunction with a $3 billion U.S. government grant to fund and make chips for the military. And so it's a big deal. This is actually a lot more meaningful than any money that the government can give them. Intel is far from dead, but I mean, it would not shock me even still with, okay, well, actually one step back. This has been like one of the most bullish, crazy cycles for semis ever, like ever. And Intel still has underperformed the broad market terribly. And it just comes down to leadership. I don't know that they have it in place. Some of you guys probably are invested in Intel. But the Amazon deal gives me a little pause, and it makes me think, okay, if there's a few more deals like this is very good for Intel. It's a lot healthier for them and also their partners than just U.S. government money. So, yeah.
Cool. So what I'm okay. Yeah. And it seems like the government is also trying to save Intel, man. Like the government contracts for Intel and like the deal with Amazon for Intel. Like it just seemed like really interesting timing for Intel. Because didn't they just like their stock just tanked a whole bunch?
How about we bring up a chart?
Okay.
I can do that now that my mouse is working. I've got it up, or you can pull it up. Intel 2147. Hey, up 2.68 today. You can see it actually spiked a little more over the last 5 days, up 13.5%. Month, oh, it's flat. 6 months, oh, it's down 49%. By the way, no more dividend for them. Year to date, again, one of the craziest times to be in the semiconductor industry. Almost every single one, even mediocre semis, tend to perform well. Intel, down 55%. Now, look at a year. It's not quite that bad. They did have a run up. 5 years, they're down 57%. Max. If you invested in 1990, I mean, you're up a lot. But that's a long time to hold this company. They're trading at the same value that they were trading back in 2002. That's just insane. Now, you were getting dividends along the way. You do see that there was a COVID spike and some exuberance, but that's what you get with underperformance. This basically, Intel may change. They've had a CEO there. This is his third year. They have a lot of tailwinds that are just blowing in their favor. And so maybe it's not a value trap anymore, but this right here is the very definition of value trap. Like, can you imagine buying Intel and getting excited back in 2000? You're still underwater. You never would have. Like, they've not made a new all-time high since 2000. Like, that's insane. Hey, my favorite CEO. How's Redfin doing, actually? All right, up 4.18%.
It's at 14. Stop it.
32% this week. 62% in the last month. Year to date, up 43%. I mean, look at this.
Bro.
It is going parabolic. 1 year, 73% in 1 year. We're not going to look at 5 years because
No, look at 5 years.
CEO look bad. But
$14. Wow.
honestly,
Hold on. Let me just.
I will look at the 5 year. Do you see?
So,
okay.
Can you look at one date for me? Earnings was August the 6th.
Okay. August. That would be 19th. So we'll do
August the 6th. He literally bottom ticked this thing. Look at this.
Yeah.
So just hold your mouse and drag it to the very end. I want to see since his comments. No. Just hold it on August 6th and then just drag. What's that?
Yeah,
no,
from
click. Yeah, click. And no, click, hold, yeah.
Oh, I didn't know you could do that.
It's double since the CEO's comments. 101% since the CEO's comments.
I mean, like, if I was not in SoFi, if I didn't know about SoFi, and I think SoFi, there's some overlap certainly there.
What the heck?
But like, no, like I would have bought Redfin just because, turnaround play rates, they're not dead. There's a lot of issues with Redfin though. I will say, they've taken on a lot of debt and obligations. So, but yeah, this is insane. It's good to know about that click and drag. That's pretty useful actually. So cool.
So the reason I sort of blanked out for a second was because I was texting TJ with back of the napkin math. And don't kill the messenger because I'm pretty bad at math, but like my back of the napkin math put it at like around $150 stock price.
For a, what, $1 EPS? At what multiple?
5 price to sales.
5 PS. So what's the PE?
I don't know, man.
Okay. Yeah, don't worry about it.
Like this is live back of the napkin math. It's probably wrong, and I'm sure like I'm gonna get tagged by data driven investing in like 4 hours. Be like, actually, this is the correct number, because like the right way to look at it is like looking at the EBITDA and then working your way up. I literally just looked at net income as a percentage of revenue and then just multiplied that percentage, assuming 1 billion in net income. Insanity. $150 stock price. Yeah, Canadian math. Exactly.
Yeah, if it's 150 in Canadian, that's like what, $20 a share in United States dollars. So it's not bad.
Wow.
Yeah, 150. I would take the under.
Yeah, I would take the under as well.
Now, if it came out at 35, I could see 35. But I mean, there's a lot we don't know. There's a lot of time between now and then. That's the thing. So, but yeah, like if it goes up, like that, there will be some people that retire off of just SoFi. It's that would be an insane run, even more so than what Palantir has done. So, and with that said, let's finish on this. You want to.
Yeah, you can finish on Palantir.
All right. So I already talked a little bit about AIPCon, which was last week. There, if you're like
37, Jesus Christ.
That was about the top today. It went down a little bit. The market pulled back just because of uncertainty, waiting for rates. Probably, by the way, will get read before rate cuts are announced tomorrow. We'll see what happens. But regardless, yeah, AIPCon. If you're like, what does Palantir do? What impact does it actually have? A couple of exciting pieces for Palantir. One of those is their net dollar retention has been pretty low over the last couple of years. And so that's when new customers actually come in that have been a customer for at least 12 months, and then they increase their contract. So sometimes that's adopting another platform like AIP, if they're just running Foundry or Gotham, or they add on Apollo, or they just scale it out for their business because it's built on use. But that had not been going up until really this last quarter. I thought it might. I was right on that prediction, right on the money. And then this week was Nebraska Medicine, I believe. So pretty large. In the healthcare space, they're expanding incredibly rapidly. They mentioned a multiple million contract. Figures weren't actually released, so we don't know how much it is. But when AIP was launched, initially it was not monetized, and that monetization is happening. So you look at it, it's growing pretty well, 27% year over year. But yeah, it looks a lot like this does, like, to a T. By the way, look like PayPal's chart, like almost exactly. It's uncanny, and we're maybe close to disbelief on PayPal. So I floated this out though on Palantir. Again, I'm not bearish, but like the comments, like people just thought left and right, like I'm doing this because I'm bearish on Palantir. It's like, it's more than half of my portfolio, and I talk about it all the time. I have an autographed ball cap like sitting on my shelf in my workplace by Alex Karp. I'm not bullish, or not. I'm not bearish, rather.
Hey,
I haven't even, but no, it's up a lot, and I was just kind of curious. I just wanted to get the pulse of people to see where we're at in the psychology of market. You can Google this if you've not seen this before. It's actually pretty interesting. Commonly quoted. You'll see that on X a lot. And so the question is like, where are we on Palantir? And I figured a lot of people would be like euphoria, maybe thrill, maybe belief. There's a lot of people that are like, nope, we're in disbelief. We're in hope. We're in optimism. Of course, people are not saying denial or anxiety or panic because the stock is going up. But it was all over the place. And then there was, people that, because it is a cult, that I guess they don't know me, they don't follow me. They're like, you're just jealous because we've made all these gains in Palantir. It's like, okay, I've made a lot of gains too, but yeah, and I'm still fully in it. So I don't know what's going to happen here. I know where the company is headed long term. And again, I'm almost all shares with Palantir other than 2 leaps, which have printed. At a certain point, I won't exercise those. I'll sell those. But yeah, it's just something to keep in mind. Stocks tend to go through that. It'll go in a bear market, especially, stocks will collapse far below fair value, and that's an opportunity. And in a bull market, it can go far above what fair value or what you think fair value is, or even what you think it's capable of. So Tevis's crazy napkin math prediction of 150 in 2027, probably not going to happen. But if we go and we get another 2021 in 2027 where everything is going up and everything's overvalued, yeah, it can hit that. It would be stupid. It would be way overvalued, and I would still have shares, and I'd be very excited because I'm, drinking. I don't drink alcohol, but drinking Roy Rogers on a yacht, like, that'd be great. So,
but at $150, it would be a top 10 bank by market cap.
It would, a lot earlier than anyone expects. So, yeah, I don't know where we're at with Palantir. I was actually surprised because I was thinking, like, it feels to me maybe more like belief and thrill. I don't think we're at euphoria yet. Euphoria is like all-time highs, and we're not there. Although we did have the highest weekly close.
Wait, this is not all-time highs?
No, 45. Like, so
45?
45. So it DPO'd.
Was it like week 1?
Well, let me pull up the chart. We'll do that.
I'm gonna guess it was like week 1, like
close. So yeah, it zoomed in well enough. So it DPO'd here back in October 2020. I wasn't in the stock. I was barely, I don't even know if I knew that it existed. I did find out in January. And then January 29th, that's when this is 35, yes. But in the pre-market, I believe, it might have been aftermarket, but it actually hit $45 a share. And of course, it fell down, and it never really got above 30. I bought, somewhere in April for the first time, around $25. And yeah, it was pretty depressing. Like, it fell down to $6. I even bought some under 6 just to say I could. That might have been a pre-market thing, but I'm like, hey, might never happen again. Sure enough. And we're here. So again, as far as regular, we'll continue to have weekly closes that are higher than the previous high for weekly close, but it's still a long ways away from a new all-time high of $45. I don't think that we'll hit it this year, but we might. We'll see. We're in a bull market. This is in a great industry. I mean, it wouldn't shock me at this point that Palantir has ridden up so much that this represents the high water point for the year, and that's okay. Like, I think we'll probably stabilize above 30. You might look at that and be like, it's insanely overvalued, and like, maybe. But they're doing a lot of things right. It's not just pure speculation. It's not just being bubblicious in the right industry. That's certainly a factor. It's some nice tailwinds, but yeah. And this can happen, pivoting back, because I know not everybody here is a Palantir shareholder. It can happen to those stocks and those companies that you're holding that have executed over the last couple of years. And if you look at gains over the last couple of years, have almost nothing to show for it. SoFi is one of those. PayPal is one of those. I think. We'll see. Maybe not Redfin.
Cool. Yeah, I don't know. I think my opinion is completely invalidated on Palantir, so I'm not going to say anything.
Yeah, well, yeah. The nice thing is when we hit that 1 year date of that certain event where you sold Palantir and we're like, hey, SoFi is going to outperform it. You can just say I was wrong, and that just leave it at that. You'll get like 100K impressions on Twitter. People will be lambasting you, myself included. You know I love you, but I've been wrong on many stocks before. And if you had asked me at the beginning of the year, will Palantir be trading at any point in the 30s this year, I would have said no. Even though I made a prediction that through next April that at some point it will hit $40. I said it was pretty likely. It looks like it might do that like in the next week, which is insane. Like I just did not see this coming.
So first of all, it feels like way longer than a year since we had that chat, which is crazy. Like where did the year go? Second of all, absolutely I was wrong and all the gains to you guys. Third, I will put up a double or nothing from that point onwards, because if we're talking about like, hey, which doubles first, SoFi at 8 or Palantir at 37,
I'll say so.
Oh, would you?
Yes, okay. Yes, easy, because Palantir has so much that's factored in, and I think a lot of it is warranted. I don't think it's not cheap. It's a bit expensive. They have a lot of execution that they've done. Like listen to AIP, the testimonials, see the growth that they're actually doing. Watch what happens in the next quarter. I think that they'll have 29% year-over-year revenue growth. Maybe, I mean, that's close within 30. But I mean, still, if they have 5 years of 30% growth, they'd still be expensive by some measures if they held at this current valuation. So, yeah, it's just one of those where you have to be aware of where a stock is versus SoFi. Every way that I look at SoFi right now, it is deeply and grossly undervalued. I can't say that with Palantir. Like, I think PEG ratio, maybe just because it's newly profitable and you can't use that for a newly profitable company. But yeah, deeply unprofitable versus like, I would say a decent clip above fair value for me. Yeah, SoFi will double easily first. SoFi will probably triple before Palantir doubles, and it wouldn't shock me if SoFi quadruples before Palantir doubles. I don't know that one. That one seems like an even odd thing.
But like that's a crazy thing, man, because again, I don't want to get into this because like I'm like robbing future content for myself. But like what I've learned from this is, number one, don't fucking stick your neck out publicly because people are assholes online under veil of anonymity. Number two, more importantly, is I think I was like super early to cut bait on Palantir, but directionally speaking, like my thesis was always that SoFi just has a longer runway to go. And if we just extrapolate, even with the prices of last year, 3, 4, 5 years out, it's an $8 billion market cap company compared to an $80 billion market cap company. Like if we're talking about a 5X, like SoFi has so much more room to run because, for 5X, Palantir has to go like 400 billion. Like, you know what I'm saying? Like it becomes not feasible after some point in time. And so I think over a year, anything can happen. Absolutely. And like total kudos goes to, the Palantir community. Absolutely. You're right. But I just think that like, again, if I was after every year, like double or nothing, eventually I think I will be proven right, simply because you're talking about a stock that's like an order of magnitude, like smaller, I don't know.
So I need to pull up actually a short video clip from AIP that was really interesting.
Yeah. So I don't know anything about AIP.
So yeah, let me find it real quick, but it's basically ERP. So The thing is, SoFi is a very good company. It's a very good product. A lot of the aspects of the flywheel are going to absolutely work. A lot of tailwinds, and I completely agree that from here, SoFi is far more likely. Like it's not even close. It's like 90% more likely, maybe 95% more likely to double before Palantir doubles again. Might not happen that way, just because exuberance. We might go into that on that market psychology cycle up to that peak. Could Palantir be trading at like $76 a share in 6 months? Yes. Is it warranted? Probably not, but it could happen. So like crazy things can happen. We could also enter a bear market just out of the blue, crash, recession. But let me find this. It'll take just a second here.
And then we wrap.
Oh, that's the quotes. That's not the video. Okay, I've got it.
One thing I will say just before you bring that up, Roy, I think that if I were to go to Twitter right now with the stocks where they are, and I'm like double or nothing, I guarantee you that there's going to be a huge majority of the Palantir community that's like, I'll take that double or nothing. I'll take that double. Palantir can go to $80 tomorrow. And like, I just think that will speak to the sentiment of the market. Like if you were to put that chart back up of the emotions,
oh yeah.
I think people taking that bet blindly, might be indicative of where we are in that cycle.
Yeah, and a lot of that is based on like how a stock has performed, not how the company has performed, and that's a major mistake because, well, I mean, they always say that in those investing videos that past performance does not indicate future success or whatever. But this is so AIP basically AIPCon before FoundryCon. This is the fifth one that they had. By the way, lots of Nike shoes behind it. I was like, oh, Nike contract maybe. Probably not. Like it seems like that was debunked. But they come out and their customers, without being paid for it or anything, they just want to show up and they want to present. And they have a lot of these. They had 100 vendors actually present during this time. They'll come out with like a 6-10 minute, sometimes a little bit longer presentation. And there's a lot of vendors on the side, including Tanner's very favorite Shift4. Will present and talk about the impact that Palantir has because it's a cult, not just for shareholders like myself, not just for those that are actually in the business, but also their clients that they get. And so listen to the way that this guy talks about AIP and the impact that this has, and specifically what he sees happening with ERP software, which, by the way, is a huge TAM in industry.
Everything that's in an ERP system, we're doing in Palantir today. So if you're here and you're an ERP reseller, I'm sorry, your time's over. A lot of you guys here I know have legacy systems. You can do more in Palantir in less time than it's going to take you to implement a new ERP system. For us to implement ERP across 11 factories, we're talking almost 5 years. This is less than 9 months work, and we've implemented over 10 business use cases already. We are seeing immediate bottom line results. We're driving on-time delivery. Our customers actually like us. We actually interviewed our customers. The reports went from, oh man, it's like a Ouija board when we order stuff, to holy cow, they actually deliver on time. It's amazing. We're driving that kind of change. Everything that's in an ERP system.
And this is not a Palantir employee. This is a Palantir client or partner. Not paid to say that. And we get those comments. This is not like a one-off where it's like, oh yeah, just one dude and their experience. Dude, like customer after customer after customer just do mic drop moments like this. It's insane. It's incredibly rare. Palantir is an absolute unicorn of a company. SoFi, I don't know if it's a unicorn or not. We'll have to see what happens with the tech platform. It's a very good company. I'm glad that I'm invested in it. I'm not selling that for Palantir, but I'm also not going to sell Palantir for SoFi. Keep your unicorns, let them grow.
That's, I think, a good note for us to end on. Everybody, this has been the Bootleg Weekly podcast. Thank you so much for watching. We are live every Tuesday night. I am not paid to say that directly, but indirectly, yes. Roy is still a Palantir fanboy, even though he is probably one of the more sensible in the pack. And we will see you all next week. Good night.
Palantir.